The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you on this snowy Sunday morning. Welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlear, along with Accunet Mortgage and Accunet Realty Advisors owner and president Brian Wickert and licensed millennial loan consultant David Wickert. As always, if you have a question or a comment, you can call us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620. I'm looking forward to hearing about the November home sale numbers here in southeastern Wisconsin because it sounds like it was a great November.
Crushed it. We're gonna postulate on why that was. So fantastic. It's not because rates are so good anymore. And you got to remember, November home sales, those folks locked in their rates in late September and October when rates were still 3.5%. I thought maybe we'd start out the show quickly, Steve, with an update on where rates are.
Right.
And just a warning that, this is the Wednesday we've all been waiting for, December 14th. Hold your breath. We've been waiting longer for this than Santa Claus.
Yes.
We're just about the same amount of time. But it's
the Fed has been teasing us for some time.
Well, but this is more of a lump of coal than a present under the tree. The chances are now only 97% that the Federal Reserve will raise rates this coming Wednesday. And when they do, when we say the Fed's going to raise rates, they're raising the Fed fund rate, and that's the rate that they charge banks to park their money overnight. And so that's going to go up. And immediately the prime rate's going to go up as well. So right now today, the prime rate's at 3.5. It's going to 3.75 on Wednesday, barring some big international catastrophe. And the big question, though, is how many times are they going to raise rates in 2017? So the market, today's mortgage rates and Treasury rates all anticipate the Wednesday rate hike. So, David, what is your research telling us about the number of Fed rate hikes then following this one in 2017?
Well, I'll give you one perspective. So Charles Evans is the Fed president in Chicago, and earlier this year in October, he said, well, we might raise rates 3 more times in 2017.
Okay, so go ahead.
No, I was just going to say, which is maybe posturing more than anything. You know, the Fed wanted to raise rates twice here in 2017, and they're only going to get around to it once.
Okay. So here's how I think that plays out for long-term interest rates like the 30-year fixed rate. It's all about what Janet Yellen says and the statement says that's released in terms of, well, and we anticipate, 2 more rate increases.
Setting expectations.
That's right. So she's on the high end. If she comes out and says 3, or I should say the committee, it's not just her, comes out and says we're going to raise rates 3 times, I think that's bad for 30-year fixed rates.
Correct.
If she comes out and says 1, that might actually be good for interest rates, and I think the 2 is the Goldilocks, probably what everybody's expecting. That's just my opinion. All right, so what happens when the Fed raises the Fed funds rate? The prime rate goes up. That means everybody who's got a home equity line of credit, because they're all tied to prime, is going to see their rate jump in January.
Yep.
So it's not too late to, because that's an adjustable rate mortgage, folks. If you have a home equity line of credit, you might have a teaser rate that's locked in for 6 months or a year, but then it's going to revert to the good old prime rate, and that's headed nowhere but up. So there's still time, and if I was going to do something, I'd do it on Monday or Tuesday, right, before the possibly gets worse.
Right.
And go ahead and combine your existing home equity line of credit with your existing first mortgage, maybe lock in a 20-year fixed rate, maybe a 15, shorten up that term, and get interest rate risk out of your life. We're seeing a lot of that. By the way, we can lend up to 80% of your home's value.
Yes.
And home values are going up. A couple of quick updates on where mortgage rates actually are right now. Freddie Mac weekly survey that came out on Thursday. We're now at 4.13% for the 30-year fixed rate nationwide average. That means with a half point. So on a $200,000 30-year fixed rate, you're paying $2,500. That's probably about a 4.2 APR. I just checked Rocket Mortgage from Quicken Loans this morning. By the way, Quicken Loans is a registered service mark of Intuit Inc., used under license, and Rocket Loans is a registered service mark of Quicken Loans. On a $200,000 loan, 720 FICO score and 25% down, or equity, they're offering 4.25, but you have to pay, are you ready? 2.125 in points, plus regular closing costs. So that adds up to only $5,400 in loan costs. David, where did we end up the week if you had 720 credit?
It would be 4.125 with just $900 in cost. APR is 4.14.
Do you have a calculator, Steve?
Okay.
I hear that's less.
That's a $4,500 difference in closing costs between us and the Rocket guys. All right, time for us to take our first break. When we come back, Steve will get to pick whether we do home sales or if he wants to hear about David and my excellent trip to the first ever digital mortgage conference and what's coming up in that way when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
I'm Colleen Boland with a 620 WTMJ, PellaWI.com time saver traffic update. 94 eastbound, an earlier accident near 84th Street. That's just moving out of the median right now, so that's cleared up. 94 inbound Highway 16 to the zoo is a 13-minute trip. The zoo to the Marquette 7. Kenosha County, an earlier accident on 94 northbound. The head block, the two right lanes, is now clear. That was near County C. 43 northbound, if you're heading up to Lambeau Field, snow is accumulating on the road in some areas. Travel times are slower. Takes some extra time. 43 northbound downtown to Good Hope Road is 9 minutes. 43 inbound Brown Deer to the Marquette is 12. 4145 southbound Highway Q to the zoo is 15 minutes. And 894 northbound the Hale to the zoo, that's about 6 minutes.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, don't look now, but the Packers are on the rise in Wayne Larrabee's latest NFL Power Poll. Why is Wayne's faith in the green and gold on the uptick? You can find out on the Packers section of the WTMJ app. You're in the midst of the Accunet Mortgage and Realty Show on this snowy Sunday morning here on 620 WTMJ. It's now 10:19. What do you say we talk about what you guys did out at the Digital Mortgage Conference in San Francisco?
All right. Yeah. We had a good time. It was rainy, but so that forced us to stay at the conference. We weren't, lollygagging around. Had some good food to eat, but it was really, really a lot of fun. We were glad that we went. It was fun. It was very informative. All right. And so the best news that we can share with the audience right now is that it's going to get easier, a little bit more convenient, well, possibly a lot more convenient, starting as early as next week, to get a mortgage or to document a mortgage. And that's because Fannie Mae's just rolled out a new service. So we're talking about loans of $424,100 or less that are not FHA loans. So this is most of the loans that we do. 30-year, 20-year, 15-year, 10-year fixed conforming loans that get sold to Fannie and Freddie. They are rolling out a new service where we won't need, theoretically, people to give us their pay stubs and W-2s anymore because we're going to be able to use a service through Fannie Mae that's going to gather that information directly from their employers. And so that's going to be a little bit more convenient. And then the other thing that's going to be available through that is something that we've kind of poked fun at, or well, maybe not fun, or criticized. And that's that same asset verification system that Rocket Mortgage has, where the person, the borrower, can just put in their username and password from their bank, and then the system will verify all the information that we would normally get by the borrower uploading to us 2 months' worth of bank statements. Now, we've said before to each other, including you, Steve, on the show that, we'd never do that. But guess what? David and I got to meet the guy who invented the technology behind the scenes. And now that Fannie Mae is rolling it out, I think that adds further credence, and it turns out that I can now say I would do it. And
wow.
That's because, their system destroys your username and password. It doesn't store it. After it's done doing this check with your banking institution, and you can do multiple. If you had a Schwab account, it's hooked up with Schwab, Bank of America, all the banks that have online lending. It just does it once, and then it ditches it. And then it creates a 7-digit code, I guess, is the magic that it then allows it just to access the data in the future. This could be really cool. I've got some people that I'm helping get pre-approved who are like, well, I don't have all the money saved up for my down payment yet. and I want to accumulate it between now and closing in 45 days. Well, that is a royal pain in the neck for both the borrower and the lender. And using this new service, it would continually update the balances in their account as they move between the time they write the offer and the time of closing. So we'll see. It's an option. It's not mandatory, but I just want to say that, I've converted.
Well, if only because, as I pointed out to someone at least, that people were nervous to buy a book on Amazon in 1996 and put their credit card in the internet.
Right. And now I just bought some light bulbs online yesterday from a place I never heard of, except it was called lightbulbs.com. And I'm putting my credit card in. Okay. I guess I feel okay.
There you go.
All right, so that's the big takeaway. Also, we're going to see more and more. Rocket Mortgage, because the guy gave a presentation from Rocket Mortgage. That's Quicken Loans, cool self-service deal. They've already closed $5 billion of loans on that Rocket Mortgage platform, despite their closing costs being ridiculously high. He didn't say that. That's my criticism. So there are a lot of people out there that just kind of want to get a mortgage mostly by themselves. So David and I also went shopping for technologies that will allow us to put more of that capability in our customers' hands. Even though we're still more of the, hey, we can give you some really good advice, we're going to put more tools in the hands this coming year in the hands of consumers. All right, when we come back now from this break, we'll get started on what's happening. Why are home sales so great in November, and what were they when we come back?
Right here on the Accunet Mortgage and Realty Show on WTMJ. And if you have a question, you can reach us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, he's learning from one of the best quarterbacks in the NFL, but who is Packers quarterback Brett Hundley off the field? Learn more about the Packers backup QB and his relationship with Aaron Rodgers during Packers One-on-One with Greg Matzik. That's today at 12:07. Sponsored by Pella Windows and Doors of Wisconsin, DMX Airflow, Sound Decisions Racine, and New Generation RV. Brian Wickert and David Wickert are with us as we jump into the November home sales numbers.
They were fantastic, Steve. And for the month of November, we're looking at the 5-county Milwaukee metropolitan area. I'm not even going to say what counties there are. You should know what those are. 1,243 single-family detached homes sold. That's 220 more than November 2015.
Wow.
A 21% increase. Wow. That makes November the winner so far. If you look at, every month this year versus the year before, November is the winner. Very, very strong. Okay. The condos also up. Are you ready? Condo sales, 24% from last year. Rocking it. All right, David, what's your leading theory as to why?
Was 2015 just kind of slow? Was it particularly cold last November and I've just blocked it out of my mind?
Unknown. We'll have to ask John Milan. Okay, that's normal.
I don't know. Pent-up demand from buyers?
That's my theory.
Okay.
That's my pet theory because, we kind of had more buyers than sellers in the summer months. And now remember, these home sales that closed in November, those offers were written in September.
Yeah.
Well, that's right after the summer selling season, or kind of the tail
still
end.
is.
And early October.
Yeah.
So I think this is a reflection of pent-up demand. Now, maybe it's also a reflection of there's a little more supply. More people with home prices up. I think sellers are encouraged. Although David and I were just at an open house for one of our favorite realtors last night, Paula Langlois, and we met some nice people there. We met a gentleman who tried selling his house and is pulling it off the market for the winter. And I didn't ask him what exactly his home price range was, but he learned this lesson. He needs to update his kitchen because the first thing he told me when we sat down was, I'm going to pull my hair. I guess I got to do some kitchen remodeling because people expect.
Got to spruce that up.
That's right. Nice homes. The other thing that we should say hi to Norma and Jim, longtime listeners. You run into people at these parties like, I'll listen to your show all the time. So hello if you're listening this morning to Norma and Jim. All right. Back to the price ranges that are hottest. The 170 to 180 price range, only a 1.9-month supply. And remember, we measure that the kind of the strength of demand for any given submarket. You take the number of homes listed for sale, divided by that month's number that's sold. That gives you a number of months supply. Anything 3 or under is strong.
Hot market.
Seller's market. 3 to 6 is balanced. Over 6 is
slow.
Buyer's market, right? So 170 to 189, the winner at 1.8 months. The 180 to 190 had a 2.7 month supply, but then the real winner was 225 to 250 price range. That had just a 2.9 month supply, but the other thing we can measure is velocity, how fast homes are selling. Homes in that 225 to 250 price range were getting accepted offers in less than 2 months, just 1.7 months. That was the hottest. Now, bad news, if you are in the price range, where's that number? If you're over 500, it's still really slow. All right, we're going to cover a couple of more tidbits about the housing market for November and how we did. Also talk about how higher rates are going to impact the 2017 market, and also a couple of good stories from the front lines of mortgage lending when we come back.
Here on the Accunet Mortgage and Realty Show on 620 WTMJ, it's now 10:30. As we pull in from the WTMJ 24-hour newsroom, Colleen Bolin.
Thank you, Steve. A 620 WTMJ Bryant heating and cooling storm team alert. A winter storm warning in effect until 8 o'clock for all of southeastern Wisconsin. Let's get right to the roadways. I-43 northbound. If you're heading up to Lamb.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Brian and David Wickert are with us this morning. As always, if you have a question, you can call us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620.
If you got a question, this is our last show of the year, David and I calculated, because of the Packer and holiday schedule, so now's the time. But that's right. You can call us anytime at the office to 262-781-1100. All right. Wanted to just finish up and say, okay, if you're sitting out there with a listing in the 500 to 750 price range, there's a 10.5 month supply. And for the people that won, meaning they made it to the closing table, it took them 5.3 months to get an accepted offer. So you got to buy
just fewer people in that range.
That's right. And if you're in the 750 to $1 million price range, there's a 26 month supply. Yep. Okay, then just real quickly to finish up that idea on days on market. Okay, which are the fastest selling municipalities?
Can I guess?
Yeah.
New Berlin.
Bingo, in number 2 position this month. So these are for homes that closed in November. 1.4 months, so just 43 days it took for the average home in New Berlin to get an accepted offer. Going in kind of countdown fashion, Wauwatosa, 2 months. West Bend and Grafton tied at 1.8 months. So this is from the day you put the house on the market to the day you get the accepted offer. Tied with 1.7 months are Oak Creek, Germantown, and Cudahy. Brookfield, taking it home, David's former hometown.
Go Lancers.
1.6, go Lancers. 1.6 months. New Berlin at 1.4. And the winner, Greenfield, this month with just 1 month on average, 31 days for the 19 homes flying off the shelf. All right, so that kind of wraps up your state of the union relative to home sales for November. I think it's safe to say great time to buy. By the way, our opinion, despite the fact that rates are now with no points on a 30-year fixed above 4, we're able to still do a 3.99 rate with 25% equity and all the other right stuff.
Yes.
But you have to pay us 0.4 of a point to get that, which makes our closing cost about $1,900. So you got to go to 4 1/8 to get the no point deal. That is going to have precisely 0 effect, I think, on people buying homes.
Correct.
It's just, that's what all the professional prognosticators say.
Or even talking to Norma and Jim, yesterday they were talking about helping their daughter get a place because her rent kept going up and up and up, and to be able to know what your monthly payment is for the foreseeable future is
okay. That's a good point.
I think that spread is continuing to grow between what rent actually is versus what you
can
buy.
Own for. Yeah, sure. Now, so I think in this next segment we're going to talk about an article that was published by the Wall Street Journal and a guy that David and I both know, Nick Timiraos. And here's the quick story on that. When David was in college, I think one of your final years, David was a strategic communications, in other words, public relations major. And so I had gotten a call from a reporter at the Wall Street Journal, kind of randomly, and was a contributor to an article. I got quoted in the Wall Street Journal, which was really cool. So David and Becky and I and Grace were going to go on a trip to New York. And I just said, I'm going to call this guy and see if we can, come and see the Wall Street Journal. They let us in. We met a bunch of other reporters, including Nick Timiraos, who's now the national correspondent for all things economics. And they keep calling us for input on various articles. We're one of their go-to mortgage people now because that's just the way it is. So it pays to show up. But he wrote an article talking about how hard it is to get a mortgage.
And I wish he would have called us before he wrote the article.
He didn't call us for this one because when we come back, we are going to talk about our perception that it really isn't that bad. In fact, it's pretty amazing.
And given the home numbers you just noted, it can't be that impossible.
It can't be that impossible. So when we come back, we're going to talk about things like what does it take for a down payment to buy a house in 2017? And also, what about credit? You hear, boy, you're really tough on credit and income and all that kind of stuff. So when we come back, we're going to give you all those details.
Right here on the Accunet Mortgage and Realty Show, and we'll also check some WTMJ traffic for you coming up here next.
I'm Colleen Boland with the WTMJ, PellaWI.com Time Saver Traffic Update. 43 northbound between Manitowoc and Green Bay. We have reports that the roads are snow-packed and traffic is moving very slowly through that area. So if you're headed up to the Packers game today, give yourself plenty of time and be patient. Some cars also reported to be sliding off the roadways, but no major accidents in that area. Locally, 43 northbound, a disabled vehicle at Brown Deer Road, right now downtown to Brown Deer is about 10 minutes. 94 inbound, Highway 16 to the Zoo is 13 minutes. The Zoo to the Marquette, 7. 43 inbound, Brown Deer Road to the Marquette is 12. 4145 southbound, Highway Q to the Zoo is 15 minutes. And 894 northbound, the Hale to the Zoo, that will take you about 6 minutes.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Charlie Sykes is one of the most well-known and accomplished radio talk show hosts in the country. He's been here at WTMJ for 23 years, and as he winds down his radio program, but before he signs off on the 19th, he joins our Eric Bilstad for a look back at his career. It's this week's edition of WTMJ Conversations, which is coming up here at 11:07 today on WTMJ. It's now 10:45 on this Sunday morning, snowy, and we now move to, you guys were just talking about this Wall Street Journal article where the perception was maybe it's really hard to get a mortgage these days, or even, your credit really is a big factor, but that's not quite true.
Correct. So the headline, the clickbait, was credit restrictions cost home buyers deal of a lifetime. And the quote that I liked in particular was that explained how banks' insistence on using tax returns to verify incomes put in place to satisfy the new ability to repay regulations had created bigger hurdles for business owners and the self-employed, as in they sometimes legally write off expenses to lower their taxable income, but can then have trouble proving their higher take-home pay to lenders.
As President-elect Trump would say, wrong.
So it's just the notion that it is a hurdle too high to buy a house is just patently not true. Given the home sale numbers that you just talked about in the last segment, and then also just the general ways that we're able to help home buyers get into a house.
Well, let's talk about down payment, David.
Okay, so
that's the number one obstacle, by the way, of people buying a home is down payment. Go ahead.
Well, I think when I'm talking on the phone with people, my number one, other than obviously, I have money sitting in my savings account, option number 1 star is a gift. I think you're on the airwaves this week or even this month talking about, hey, it's Christmas time. If you're talking with grandma, uncle, parent, they can give you a gift to
for
go
all or part.
For all of the gift. And I just think that removes that, I don't have the money to go make a home purchase.
What about a WHEDA 30-year fixed rate, first-time home buyer deal? I've got it lined up here, David.
Okay, good.
You can do that with 679 credit. So remember, the other thing that people complain about is, oh, my credit has to be so great. Well, it depends on what loan program you're talking about. WHEDA, which is a regular 30-year fixed rate mortgage, just like you get from Fannie Mae, except they're keeping the money on the shelf. That APR is 4.663 with a 679 credit score, 3% down, and no monthly PMI. And by the way, wait, there's more. And we can line you up with a loan for the 3% down payment.
Yes.
And closing costs. That's probably our best product out there. But what else is on your mind? I kind of jumped in.
Well, no,
solution.
But the other thing, so there's 3 buckets where you can get a loan. There's conventional that gets sold to Fannie Mae and Freddie Mac. Even Fannie Mae is only a 3% down payment. So on a $200,000 house, that's $6,000.
And that's with no income restriction. I should have mentioned that on the WHEDA program, there is an income maximum. It's about $74,000 in a lot of counties in southeastern Wisconsin.
And then
on the Fannie Mae, 3% down, there's no income limit. You could theoretically borrow $424,100.
Yes.
And
then, and if you move past the conventional route into government programs, although let the record show Fannie and Freddie are owned by Uncle Sam, but we'll leave that aside for a second. If you go FHA or VA, those guidelines are more forgiving on credit score or past things like bankruptcy or foreclosure.
Well, David, how long do you have to be out of bankruptcy on an FHA loan?
2 years.
2 years. So you can say, blow off all your creditors, and then 2 years later come back and say, hey, I'd like to buy a home. And on the FHA program, we go, okay, what about foreclosure? You totally walked away.
3 years.
3 years on an FHA. Now, if you go conforming, I think it's 7. Right? So if you want to go Fannie and Freddie. But an FHA loan's got a great rate. The only downside, or one of the downsides, is you're going to pay monthly government mortgage insurance.
Correct.
But if you're in the mood to buy a home, FHA's a good deal.
So this is just us throwing cold water on the Wall Street Journal's article. Our friend Nick, nice guy, but he's wrong.
Maybe I might have to call him this week and say, hey, we want a rebuttal. But Chance said it's really not that bad. All right, when we come back for our last segment of the year, we'll tell you a couple of interesting stories from the front lines of mortgage lending, because you know what? They just keep happening. When we come back.
Right here on the Accunet Mortgage and Realty Show on WTMJ.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, that winter storm warning continues until 8 o'clock tonight. We'll get the full update on traffic and weather and news coming up here at the top of the hour with Colleen Bolin. Right now, though, the final segment of the Accunet Mortgage and Realty Hour, we delve into the front lines of mortgage writing and just some of the more interesting things that you two run into day to day.
You might recall 2 weeks ago we talked about the miracle call.
The Hail Mary purchase.
The Hail Mary purchase. This is the one where the dad called up on November 14th and said, hey, I'm willing to give my kids all the money, or my daughter and her fiancé, all the money to buy this house, because we made it a cash offer. But they got to buy on November 29th. Any chance, Brian, you can kind of help me out and not make me come up with the $200,000?
And you put on your cape and decided to. Yeah.
Could you possibly get a loan ready so that I only have to get from the down payment? Great news. We closed that loan on November 29th in just 16 days. So all you realtors out there, don't call me if you want. No, it's hard to do that. We pulled it off, but I don't want to do that every time. I'd rather tell you about this nice couple where we did complete the rock solid approval ahead of time, and then they got their accepted offer on the 2nd of December, I think it was, and wanted to close by the 29th of December, and that is going to be like relaxing.
Well, because we did all the homework ahead of time.
We did all the homework ahead of time, and that's still really impressive in today's mortgage and real estate world. But I think we are well positioned for people that come to us for their rock-solid pre-approval up front to get that done on a fairly regular basis in 2017. David, what do you have?
So my story is this week I had a conversation with a dad and a son trying to buy a house for the son, get him out of renting. And the human conversation that we had was, well, should Dad buy this as an investment property?
Was that his first idea?
Correct.
Okay.
Or upon consulting with me, I was like, well, let's stick the son on the mortgage as well, because then we get to classify it as owner-occupied.
Sticking somebody on a loan sounds bad.
Sorry.
I think you meant add him
Include.
to the loan application.
But it is to say so, but here's the additional info. The son had worse credit than the dad.
Under 680, you told me.
Correct. But
the dad had 800 credit, really top.
Correct. But the difference was 0.5% in rate.
Okay.
Between owner-occupied son on the mortgage contributing to owning the home and paying it back versus dad just owning it like it's a rental property.
Right. Probably would not have gotten that advice from a do-it-yourself website.
Well, and so that was this is my self-serving theme, but it is to say, as much as we learned at the digital mortgage conference that there's a lot of cool technology that can make it more convenient, ultimately, my snarky is I don't do my own surgery. I don't trek through the Amazon jungle by myself. This dad wouldn't have maybe even known to consider, well, maybe I can include my son on this mortgage until he talked to me or any of our awesome loan consultants
at Accunet. Yeah, and I also want to say that it's amazing, back on the theme of, it's way hard to get a mortgage. The son didn't have to have any income. The son just has to occupy the property.
Correct.
All the income can come from the non-occupying co-borrower.
Right.
The occupant just has to have a reasonable enough credit score and be willing to occupy the property, which is kind of crazy.
Correct.
Crazy loose.
Right. And so that's as much as we're going to try to make it convenient for people to get Rock Solid pre-approved in 2017 and beyond, it is to say, boy, wouldn't it be good to have a conversation with somebody? As much as you can do your own research, the ability to just have a sounding board.
Oh, I got one. Back to that couple who's buying the house here on December 29th. They have a lot of money saved up. They could put 25% down. So they're like going to put 20 down. But then in the course of conversing with them, well, we want to do about $40,000 worth of remodeling.
Mm-hmm.
What? So I said, well, guess what? You can put 10% down, and they have really good credit, on a 20-year fix, because they were thinking about maybe even paying it off in 15 years. 20-year fixed for them, 10% down, 3.99 with no monthly PMI. They're like, wow. And now they get to keep, an extra
cash in their pocket,
$43,000 in their pocket for that future remodeling, which guess what they were considering using instead? A home equity line of credit in the future, which has a what kind of a rate? A fixed rate? No. A variable rate tied to what? Prime, which is going up.
Yes.
So I don't know if they're going to actually do that maneuver. I kind of think they will, because they're just so flabbergasted. Like, what? You can do 10% down with no monthly PMI? Yeah, we can. It's one of the many cool tools we have at Accunet Mortgage. So to wrap up the year, thank you, everybody, for listening to the show this year. Thank you for all your business. It's been a tremendous year for our company and for home buyers and home refinancers. If you know somebody that's looking to buy a home in 2017, I hope that you would encourage them to give us a call at Accunet or visit us online at Accunet.com. We can really do a lot to help you become a well-informed, well-positioned home buyer in 2017, and also not too late to go ahead and consolidate that home equity line balance that you might have out there with your existing first mortgage. Put them all together in a nice new low fixed rate. So that's all we've got. We're going to see you next year, Steve. Although I'd be perfectly willing to have the Packers bump our radio show if they can manage a playoff appearance on that first Sunday.
That'd be fine.
All right. Thanks for your help this year, Stephen. We'll see you next year.
You got it. And you've been listening to the Accunet Mortgage and Realty Show on 620 WTMJ. We're in the midst of this winter storm warning till 8 o'clock tonight. Colleen Bolin is standing by. We'll get an update from the WTMJ 24-hour newsroom, a check on traffic, and also the weather coming up on Wisconsin's Weekend Morning News.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.